I'm going to do a 100 trade back test trading the ICT smart money concept trading strategy to determine if it's a good trading strategy or a bad trading strategy. Not only that, I'm going to document every single trade that I take so that we can have a look afterwards, and not only just for me, but for you guys to open up a Google document and you guys can look at all the trades that I take and learn from them. In fact, I think this would be a great follow-up video from ICT himself, is to actually make a reaction video or some type of review video where he looks at all my trades and he says, you know what, out of all the trades you took, these are your best trades and these are the reasons why. So everybody that's looking at this strategy can learn from this. So maybe show him the video, reach out to him, and I think that would be a great collaboration on his behalf. Now, I have gone ahead and watched a couple of videos on YouTube talking about the trading strategy so that I can do a proper back test for you guys and explain to you what exactly the setup is. So let's get into it right now. And by the way, I appreciate right now if you guys like this video, subscribe. And if you guys have any questions, you can reach out to me on social media at MoneyballAustin. So what is the trading strategy? Well, let's get into it. I'm going to draw a picture of what we're typically looking for when it comes to the setup. Now, I'm going to break this down on TradingView, the indicator as well, but we're going to take a 24-hour general period, and let's just say this is the price action for the time being, okay? We mark out the previous day lows and the previous day highs. So this is going to be the previous day's lows, and this is going to be the previous day's highs. And now we're right here where price is currently. What we want to see is price breaking above it and then reversing back down. So an example of this will be, let's use this color. So we got the next day coming in, and let's say prices go up. They break above the previous day high, and I think a lot of people might be thinking, okay, it's a breakout, we're getting long or whatever. But what we're looking for is a reversal and to remove some type of confirmation on the way down, some type of pivot point, higher high, higher low. We're trying to remove this area of price action and then sell the pullback back up into this area, okay? And it's the same thing for demand, or sorry, not demand, but if prices are going down. So if you have prices going down like this, you need to see prices reverse and take out the area of levels that started that whole breakdown, okay? And then you simply buy the pullback if and when prices pull back. So what does this look like on the chart? Well, let's go into the trading view for a second and we'll talk about this. I'm going to do a back test on Euro USD. Maybe I do some on gold, silver, NASDAQ, and the pound yen, but we'll talk about that in a second. The first thing that you're going to want to consider doing is adding the indicator on your trading view. So you go to indicators. The one that I saw everybody talking about was ICT space midnight. And it's this one with Liku 160. That's the one that I was getting. Okay, so you click on that one. And then the settings that people were talking about, unclick the show midnight GMT line. And you just want to see show GMT night New York line. Okay, so there's going to be a line that gets printed once the new day starts for like the New York time, 12 a.m. Okay, and then you'll see, so here's one and then here's another, and this is the last price action for the last 24 hours during that time. That's going to include the London, the Asian, and the New York session. It's going to include all three, and so you can see the highs and the lows. And so what we want to do is we want to draw out our previous highs. So this would be the previous day's highs and the previous day's lows. So this is what our chart would look like as of we are looking into the markets for the new day, okay? And we want to see, because we're actually pretty close to the high, we want to see prices break above it and then pull back down, okay? So we fast forward a bit, we're ranging, we're going up, and then boom, we get a big move to the downside, and we start removing all these little structure, higher high, higher low, demand zones, whatever you want to call it, okay? And this is where the origin came from up here. I might be scrolled out a little bit, so I apologize about that, but let me scroll in. That's what we're looking for. We're looking for very strong imbalances. If prices are just grinding down, that's not something that we want to see, as we want to see a relatively strong move in one direction. I believe they call it a fair value gap, FVG. and they kind of take the separation of the two zones of the imbalances and they take the middle part. But in my opinion, it's better if you take the upper half of it, and then your stop loss would just go above the whole structure. So you're always selling at the top of where prices started the whole move, or buying at the bottom of where it broke down from. And we'll get into that in a second. So that would be your sell setup, and then you short it once prices come back up into it over here, and then you go for 2-to-1, 1-to-1, 3-to-1, whatever you want. Okay. I'm going to go for 2-to-1 during this back test. Let's do one more review so that you guys understand. If this is, just so you guys can understand this, if this is a previous day's price action, we would mark out the highs, we would mark out the lows, and we are waiting for prices to break the lows or the highs and then go in the opposite direction. So if we're right here by the low, the new day gets printed. Let me just draw a highlighter to say this is the new day. And that's the price action from the last 24 hours. Ideally, what we would want is, I'm going to switch colors, is say price goes like that. And then we want to see some type of removal of opposing zones, or maybe that area that's getting removed is just like this. And then it drops down and we go up. So that would be our zone being removed. And then we buy the pullback if and when prices pull back. So I'm going to do the test, come back to you guys after I have all the results. I appreciate so far. If you guys like the video, you guys know the kind of setup, what I'm looking for, and I'll have the trades for you in a second. All right, cheers. We are back. It was a lot of work. I mean, this took a lot longer than I actually expected because I am new to this trading strategy, so it did take me a little bit longer to get into the gist of it. So I did do a test on Euro USD, Pound Yen, Gold, and the NASDAQ. So 4 different markets. Let's talk about the results. Let's just get straight into it, and I'm going to outline some of the problems that I see with this and whether or not you should look at this. So I have every trade documented here for you. That's going to be in the description below so you can look at this. So overall, 47 trades. This took a lot longer, so I decided to cut it at 50. I think 50 is a good amount of backtest that everybody could easily do on any trading strategy, and that's going to tell you at least how the trading system is. If you're down like minus 10R, then you probably shouldn't be trading it, okay? But if you're at least break even or positive, then yeah, do a second test review. This is why documenting the trades, what I can do now is that I can actually review all these trades and to say, okay, is there actually a difference between my setup if this happens and this happens versus if this doesn't happen? What do all my winners have in common versus my losers, right? This is why documenting your trades is important. So the overall results, 47 trades, 18 winners, 29 losers. I was going for a 2-to-1 reward to risk. 2-to-1 reward to risk every single trade. No break even, no 1-to-1, no nothing. The overall results were 7R, 38% win rate. I see on YouTube people talking about 85, 90% win rate with 2-to-1. There's no such thing as that, guys. I don't know a single trader that does that. I've been doing this for over 8 years. I don't know a single trader that has an 80% win rate rocking a 2-to-1 reward to risk. Sorry, but I just don't. Off the baseline, 38%, not bad. Now, there are definitely some questions that I have, and I'm sure there's a lot of bad trades in here that maybe people would disagree with. Like, some of the problems I had with this was, is there a difference in the time? Like, say, for example, here on this trade, Pound Yen. Let me scroll in so you guys can see a little bit. So on this trade, notice how the new day starts, and then I'm like taking the trade within the next hour. Is there a difference between a setup like that versus over here on this next one? If prices doesn't come back right away, like instead it's like during the US session, you know what I mean? So there's a time difference between the next day being printed and taking a trade versus this happening later on during the day. You understand what I mean? I documented every single one with a W and an L just so I could quickly look at it and so you guys can quickly look at it as well. One of the questions I had was, let me draw it out for you guys. Let's just say this is the high or the price action for the day like this. That's the high, that's the low. Is there a difference between if the confirmation, like the evidence of being price removed is, let me switch colors really quickly, is if it removes this area here that was already in between the highs and the lows that broke out that was the move that actually broke above price, versus if, say, prices did this, rallied up, and then we got this type of movement where it continued to rally up and then we saw that sell-off happening. Is there a difference between, this type of pullback versus if it's this type of pullback? And so there's a mix of both, but I think this is why documenting your trades is important, and every single trade is going to be down there. And what I have done is I've circled every little area that I deem to be the confirmation of price being the reversal. So in this case, this trade, we broke the lows right here. We broke those lows, right? Those were the lows for the day. We broke it here. And then this little box right here in the highlight is the deemed evidence that I use to be removed. Okay, so you guys could have your own conclusions on this. I thought it's a fine trading strategy. This is somebody coming out of nowhere, just testing the strategy and without a lot of knowledge. And I did pretty well. I thought 47 trades, 18 winners, 29 losers, plus 7R, 38% is actually pretty good for a first test. I think it would be great if somebody made a follow-up video and you guys said, like, ideally, these are the best trades that you took. These are the worst trades. So maybe reach out to him, say this would be a great idea. I think it's a great video for you guys to learn from as well if he did something like that. To be looking at trade reviews and to say what's a good setup versus bad setup, right? Because now you can always review to say, is there a difference between the winning setups versus losing setups if prices do this versus if price does this, and so on and so on. Right? And so I've done a couple other back tests before. I will have them all down below, trading supply and demand. This was just one of the popular trading strategies out there. But if you guys had any questions, feel free to let me know in the comments below. You could always reach out to me on social media at MoneyballAustin. I really appreciate if you guys like this video. And if you guys wanted a free training on how I trade the supply and demand methodology, I actually have a full tips video playlist on my YouTube right here. Going over the whole supply and demand methodology. So those are some great videos for you to learn about supply and demand. Once again, I'm going to end it here. Thank you guys so much, and I'll see you guys soon. Bye.